Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com, founded it 21 years ago in 2003 to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading systems, which is my personal passion. Our 21 SPY and ES mean reversion systems. By the way, we closed out some amazing trades today, sent out those to our subscribers. And of course our KISS systems. Again, if you're just on YouTube, you're greatly missing out. You're missing out on our real-time trade notifications for our systems, our 5 newsletters per week, actionable trade ideas, and active community. Again, best way to support us and support your wallet, go to the enroll button and add a subscription. Our best membership is our 6-month subscription. All the subscriptions are the same. You get everything. All the memberships give you access to everything, but the 6-month, because you're paying for that time up front, you get a big discount, roughly a 50% discount over the standard monthly. Okay? All right, a lot happened with the markets, got a lot to discuss, as well as the mechanical trading systems. So we're going to go ahead and get that started. This is our backend recorder for our website subscription service. I'm going to get that recording started now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, July 31st, last day of July, newsletter. Tonight's newsletter, as you can see, divided into 6 major sections. Again, the same general theme as I always keep. Where first off, we have our opening statement. Then we're going to move into our mechanical trading systems. We've had some awesome system trades here. Most of them closed out today on the mean reversion systems. I've sent out trade notifications to our subscribers. Hopefully most of you guys took those trades because you could have paid for your subscription for years. And if you're not a subscriber to Breakpoint Trades, you're just watching this on YouTube, what are you waiting for? You should sign up so you can get access and get notified for our mechanical trading systems. All right, then we'll move on to the general market, which had an awesome day. It was basically a gap and go day. And we'll follow up with a few indicators, sectors, US dollar, Bitcoin, commodities, precious metals, which all had a nice day, and follow up on some trade ideas. Like I said, very nice trades on the mean reversion systems. I hope some of you took those trades. And obviously we're in the earnings season. Microsoft yesterday, AMD, Meta we had that today, and Meta's up very strongly after hours. Amazon and Apple are on Thursday. As far as big news items this week, obviously you have Apple and Amazon on Thursday, but we have the non-farm job payroll report on Friday. That's a big one. Thursday, we have initial jobless claims. Today was the FOMC day. Okay, obviously rates were left unchanged. That said, Powell stated that the September rate cut is still on the table, but if inflation data continues to cool. So he added that additional thing there, where he can change course. But clearly the market is expecting a rate cut. And that's also why we've seen front-running rallies in IYR and XHB, the real estate and home builders ETFs. Okay. Again, really nice day for the market. We basically had a gap and go. We were expecting higher prices. Remember, the S&P 500, we were looking to at least fill the open gap, and that was filled today. There was an open gap around 5,500 that was achieved today. That said, the Qs have not yet filled their open gap. That open gap is around 480. The Qs closed at 471.07. I still think the Qs are going to fill that gap, even if they ultimately form a lower high. For the S&P, it gained 1.6% today. The NASDAQ triple Qs gained 3%. That's a big day. Okay. The other thing, TLT 20-year bonds are breaking out of a weekly coil pattern that we've been showing. I also gave you a trade ID on Monday. TMF, that's the triple leverage ETF that's done nicely. Japanese yen's rallied nicely. The FXY I suggested weeks ago has done well. And, gold, precious metals had a great day. So let's go ahead and move on. And before we get to the general market newsletter, so let's talk about the trading system. So first image below, item number 2, these are the SPY and ES mean reversion systems. Again, they're mean reversion. They're not trend following. They look for trade opportunities. In an uptrend, they buy pullbacks. They look for a trade opportunity. They get in and get out. They're not trying to hold for entire trends. Most of these have anywhere from 90% winning trades to higher. So I have 21 SPY and ES mean reversion systems. I run it across the SPY ETF and on ES futures. Now for ES futures, we go ahead and trade the micro contract, which is MES, and that's for the September contract. So here's some of the system trades. So you can see most of these closed out very nice trades. Some of these had second entries. Okay, the trend pullback, you can see it went long a bit early, right, a couple weeks ago, and then it took a second entry last week on Tuesday, I think that is, and both closed out today for nice gains, especially that second entry. On the second entry, we leveraged up. We typically buy the SPY ETF in the first entry, SSO in the second entry, and if there's a third entry, these can do a third entry, we do UPRO. All right, so the more entries, generally the better the trade is, because especially those second or third entries. Another trade, the S-Trap, closed out nicely. This is one I didn't communicate to the website because of some technical issues, but it did close out, so I'm just showing that for statistical purposes. And on the SPY side, the QEBTS here, it also has an exit, but notice it didn't exit today. This particular system, instead of exiting at the close like all these others, it exits on the next day open. So this is going to exit on Thursday morning. So I'll send out a reminder email Thursday morning about that, but this will close out, and it should be a very nice trade unless some disaster occurs overnight and we have a huge gap down, which I doubt. All right, futures are up already this evening. Futures are up about 30 points, so things look very strong. And here's the ES, MES side of things. The trend pullback also did a trade on the ES futures, which closed out. Essentially an identical trade. You don't always get the same trades, even though SPY and ES are obviously 99% correlated. But in this case, you had the same entries and exits. And looks like I got trend here twice. Apologize. We also have the QEBTS system closed out nicely. So all very nice trades. If you did these trades, you made very nice gains in your trading account. Enough to pay for the website subscription for years and years. Next, image number 3. So here's the SPY and ES mean reversion system trades that have occurred this year. Again, because it's been a strong up year, the mean reversion systems have been not that active this year because there hasn't been many pullbacks in the market, right? They obviously bought this last dip in the market and done well, but you can see on the SPY side of things, you can see the very nice gains here, right? We still have that open trade on the QEBTS. Remember, that one's closing Thursday on the open, so tomorrow morning this one will be exiting. And the way futures are looking tonight, we're looking at a gap up, so they should have a better gain in the morning, okay? And as far as the ES side of things, slightly more trades here, but look at these gains here, guys. And, I do 2 contracts for the first entry. We do 4 contracts for the second entry, 6 for the third. Remember, these are the micro contracts. But look at these gains here, guys. Almost $2,000 in some of these, $970 for that, etc. So very nice trades. Again, all these are in cash now, and the QEBTS will be in cash tomorrow. Now, in a volatile year, such as a bear market year like 2022, the mean reversions systems may do 3 to 4 times the amount of trades you see here. But again, they've still done well. Even if you only did these trades this year, I mean, look at the gains. You'd have paid for the website subscription for many, many years. Next, chart number 4. Here is the volatility systems. These are sort of like mean reversion systems, visually, but they're not exactly. They use the volatility instruments. So the famous one is the VIX Bollinger Band system. It's where the VIX, if it is trading outside its upper Bollinger Bands and closes back inside, that gives your buy signal, right? And when it's trading below the lower Bollinger Bands, closes back inside, that gives a sell signal. And these other instruments have the Qs, they use the VXN instead of the VIX. Dow uses the VXD. The Dow closed out a couple days ago, very nice trade. The Qs closed out today. the SPY version closed out today. I have 12 of these volatility systems. My plan later this year is to also add these officially to the website. So, yet more systems. I love systems. It's been my passion. Also, guys, I'm going to do a separate video on these recent system trades. I'll go over some of the individual trade statistics to these systems. Again, most of these have 80 to 90% or higher winning trades, profit factors of 10 and 20 and higher. So very excellent systems. All right. So congrats if any of you who took these trades. I know you're very happy. Next, let's go and move back to the general market analysis. So item number 5 shows the index sector table, what transpired today. So you can see these nice gains in the market, particularly on the NASDAQ 100 up 3%. It's now up 1.8% for the week. S&P up 1.6% today, up 1.16% for the week. And the only instrument down this week slightly is the Russell. Okay, remember it had been rallying lately over the last few weeks, so it's been underperforming here short term. As far as the 21 market sectors, pretty good day here. Most of the 21 sectors were up. A few were down, but anything that was down less than 1%. The banks were down the most, only 0.75%. Currencies, US dollar, big sell-off, down 0.5% today. That, of course, helped commodities and precious metals, which I'll get to. Now, interestingly, Bitcoin remains quite weak. So be aware of that, guys. You can see it down 2.5% today, and the stocks have been selling off lately. Commodities, big update here. Again, a couple little weakness here in corn agriculture, but natural gas obviously lost a lot of yesterday's gains, but big gains otherwise here. The DBC index up 2.3%, crude oil up 4.25%, copper up 2.25%, uranium up 3.85%, and the precious metals, great day. Gold up 0.85%, up 3.9% for the week. Silver came roaring back, up 1.5% today, up 3.3% for the week. GDX up 2.6% today, up almost 4% for the week. And you can see nice drop in the 10-year, 30-year Treasury yields, nice rally in the TLT 20-year bonds, which I've been showing looks bullish, and it's breaking out now. Next, item number 6 shows the economic news calendar. Again, we already covered the earnings. Remember on Thursday, we have Apple and Amazon. And then, of course, Friday really is the big jobs report. That's a big one. Also on Thursday, we have natural gas inventories in case any of you are still long some natural gas. Next, moving on to the charts. So again, just going up through some of these big cap tech names. So Microsoft, as you know, had earnings yesterday in the evening. It was down initially. Today it was down, but it did recover. You can see it got into this demand zone. You also have this uptrend line from January, and that comes in right around the demand zone. We also have an RSI divergence here. So this looks interesting down here, especially if you're looking to dip your toe in and you didn't ride this down. Not a bad area to start looking. KISS system isn't back long yet here, but the KISS system has done well. It actually, let me take a look at that on my end. So the KISS system closed out nicely for a nice profit a couple weeks ago. Here's Microsoft from the KISS system table. As you can see, really the last 2 trades were very nice. Let me put this, there you go. You can see the trade from October until April, and then the system went long in May. It closed out, it looks like, on July 17th. So made trade money on that, and it's been flat here. All right. Let's move on. Chart number 8, here's AMD. They reported last night, and nice gap up today off the highs. Notice the bounce stopped right at the 200-day moving average. It's always a player. But again, notice it was in this demand zone. That was a good area to nibble, especially if you were willing to take a shot into earnings. I was long this into earnings. Normally I don't do that, but it looked like a good spot. It already had a really nice correction from the March highs. I thought it was worth a shot, so I took it, and it worked out. Okay, I've been burned before, guys. I'm not perfect. All right. A couple of you have been asking about these supply and demand zones. I will be doing a video on that separately sometime soon. But again, just realize this was the demand zone created by this higher low back here, okay? Just like this is a supply zone created by the lower high and doji candlesticks back here. But again, I'll be discussing that another time, but nice bounce off the demand zone. Chart number 9, here is Meta. This reported today, and of course it's up very nice in after hours. It's trading up around 508. So basically it's back here from the early July prices. So congrats if any of you took a shot at Meta into earnings. By the way, you could see this also pulled into a demand zone, which was a good area to take a shot at. Next, chart number 10, here's Apple. It also pulled into a demand zone. It's been bouncing off of it. This one has earnings tomorrow, guys, after the close. So we'll see how it does on that. And chart number 11, here's Amazon. This also reports earnings tomorrow after the close. This too got into this demand zone here and bounced right off of it. See that? So far up nicely. If you bought into that demand zone, again, earnings are tomorrow. We'll see how it reacts to that. All right, back to let's look at the major indexes. Chart number 12, here's the Dow. Again, the Dow was up today, but off those highs. You can see it basically getting near those last highs, equal highs, logical area for it to pause or even have a double top if it wants to. If it goes on to make a new high here, you'll have some obvious RSI divergence. You can see how it bounced off that support zone, though, the previous week. Next, chart number 13, here's the S&P 500 KISS system. Again, this did exit the previous week, right, last Tuesday. It is still flat, right? Otherwise, a couple things to point out. These are the DeMark counts. Notice how you've had a lot of DeMark 913 combos, and each of these have led to a pullback, especially this last one. We bounced basically right around this 50-day moving average. You can see the bounce up here. One thing to note, this ATR, we're below the daily ATR. This is now resistance right up in here, okay? Next. Chart number 14, here's the 4 time frames. First off, the daily up here. Again, watch that ATR coming up. Should we get a further rally tomorrow? We had a support cycle here, which we've bounced off, just like on the half day. Notice the half day, the ATR is right there. And we did break above the ATR on the lower time frames. On the 78-minute, we had an end of bear cycle there, which has produced a nice bounce so far. Next, moving on to the standard chart. Chart number 15, here's the daily S&P. Been showing this parallel channel. Again, we bounced near this 50-day moving average. Today, we tagged the 20-day, pulling back. We filled that open gap on the cash. I was expecting that. Moving average ribbon's been pitching from a bullish configuration. Now we'll see, guys. Can we go back to new highs, or do we form a lower high then come down again? The S&P looks fine here. The Qs have a little more problem with the potential symmetry break, which I'll discuss when I get to that. Chart number 16, here's another clean daily version of the S&P. And you can see the move up to the 20-day moving average. Also, this channel line, if you extend this up, that extended channel could be resistance. This is also resistance area up here, little supply zone. Chart number 17, here's that other version of the S&P, which we're not favoring right now. This shows this wedge pattern. This shows a larger wave 4 pullback and then a new move up into wave 5. But again, it's not our primary view, but we'll keep it here for now as an option. Next, chart number 18, here's a half-day chart of the S&P, very clean, just a few, really no indicators except the RSI and volume. We never did fill an open gap, which still bothers me a little bit on the downside, but we have bounced nicely so far. Again, this broken trend line here, this could be some resistance. See, that's coming up. We filled that open gap today. Remember, that was our target. We thought we'd at least fill that gap, and we filled that. And there's another supply zone up here. So this is kind of your resistance, this trend line here and the supply zone up here. Chart number 19, here's a 2-hour view. This shows basically a completed ABC down. This would allow for, if that's the true count, this would suggest the S&P goes to new highs. Again, it wouldn't go straight there. You'd get a pullback soon, higher low, stuff like that, but that's potential. Again, notice we filled that gap today. And by the way, guys, you can't you can't mark this as a wave 1, 2, 3 because you have an overlap here. It overlaps the bottom of that wave, 1 if you want to. So you can't label it like that. The other option here would be some sort of complex ABCX, but I'm not going to go into that right now. Next, number 20, here's 60-minute chart. Again, we filled that gap today. Wish we had filled that gap on the downside, but we didn't. You can see kind of a W pattern we had here. A big, nice gap today. And finally, chart number 21, here's the 15-minute chart. Remember, on Monday, I said price was coiling and we're likely to have a big move. Well, that move was to the downside, but that ended up being the last flush down, and that was a good buying opportunity. Gapped up today. We filled that open gap. Next, chart number 22, here's RSP. That's the S&P equal weighted. Remember, this has had a fantastic look to it. Beautiful coil pattern we broke out of a few weeks back as equal weighted, and the Dow and small caps led. Nice rally up, pullback, basically a little wedge flag pattern. Beautiful pattern. That was a second buying opportunity. You can see today it made a new high. There is a little RSI divergence developing, but it is strong. Next, chart number 23, here's the triple Qs. Again, remember, they got out a couple weeks ago. They had a much better exit on the KISS system on the Qs than the S&P. Price is still not back to where it got out. Again, you can see the DeMark 9 led to that top. Again, also you can see the Qs got more oversold here, got near that weekly ATR. Bounce back, it's below the 50-day. Remember, the S&P is above it, and the ATR is way up here. I still think this pushes higher. Maybe there's a gap here you can see, but this potentially could form a lower high. Here's the thing. Notice the moving average ribbon with the BPTMA Deluxe. I always talk about these first pinch squeezes. First off, right here, moving average goes bullishly stacked. You had your first pinch squeeze. That's a great buy, right? Just like back here in November, you had your first thrust up, your first squeeze. That's always a great buy. Well, notice what you got here. BPTMA is below the ribbon. You have a bearish configuration. So a pinch on the underside here could give you an objective short. That would be the first pinch squeeze, for a short. So that is my concern on the Qs, guys. Next, chart number 24, here's the 4 time frames. Daily here, you can see added to Mark 13. Nice bounce so far. Again, ATR is resistance on most of these time frames. We did break through it on the 78-minute. Next, chart number 25, here's the triple Qs daily. Again, bouncing back here. The S&P made a low last Wednesday, whereas the Qs made their low yesterday, okay? But that low ended up setting up some intraday divergence, which I'll get to. Nice bounce here. You can see the 50-day moving average, your first sticking point. There's an open gap here. My hope is it can fill this gap, even if it's going to form a higher low. Chart number 26, here's the zoomed out daily view going back to late 2022. Get a couple trend lines here. First off, we bounced off this first uptrend line from the October lows of last year. You see that? That said, this pullback, almost 48 points from the highs, is the largest point pullback here. That's a potential symmetry break by points, not by percentage. So there is some odds at a lower high here, so be aware of that. Chart number 27, here's the 2-hour view. Remember this clean channel I've been showing. By the way, the Qs filled that open gap yesterday on that move down, which was needed. That move down, if you look here, I don't have it drawn in, but you had nice MACD divergence here, very clear, and clear RSI divergence. So that divergence really set up a good low. We gapped up, and we're out of the channel, so that's a positive. Now we have this open gap above. Chart number 28, here's a 2-hour view. This shows you kind of a complex ABC, X, Y pattern. You can see that nice divergence we had at the lows on the MACD. By the way, this MACD divergence here, here's the education, guys. Whenever you have I call this a MACD kiss. You can see where the MACD is basically touching its signal line. So if you get something like that and you get a stochastic, like a 5-link stochastic oversold at the same time the MACD is kissing, that ends up being usually a low-risk trade with a tight stop. Okay, I call that the MACD kiss stochastic oversold setup. All right. It also works on the short side. This was a long trigger. Next, chart 29, here's 60-minute view. Again, just showing the gap out of the channel. Potential breakaway gap because we gapped over a downtrend line. We have this big open gap up here around 480. That'd be a nice target if we can get up into there. Chart 30, here's the 30-minute chart. Remember Monday I talked about the tight coil. Well, it busted down, okay? But we formed that divergence, as I already showed. That ended up being a good buy. Nice move up today. We still have that juicy open gap above. And with futures up nicely tonight, maybe we can fill that or get close to that tomorrow. Next, chart 31, here's IWM small caps. They made a new high today, but pulled way off on a closing basis. You can see that, shooting star doji candle. We do have some RSI divergence there. Obviously, small caps have been a great trade out of this tight coil pattern and, of course, that demand zone, but little divergence here to be aware of. Chart 32, here's a 2-hour view I've been showing. Kind of wedgy here in the 2-hour, and you can see the very obvious MACD divergence there. All right, guys, that does it for the indexes. Let's go. Oh, no, we got one more here. Here's IWM weekly. Just wanted to show this. The supply zone here where we've been kind of struggling at. We did poke our way out of it a little bit today, came back. You can see how the volume by price matches the supply zone. If we can clear this, though, on a closing basis, notice your price by volume up here is really low. So this area here is kind of a low resistance. So if we can really clear this out, it could melt up easily to challenge those previous highs. Okay, that does it for the indexes, guys. Nice day. Let's go ahead and move on. Chart 34, here's the VIX. Obviously below its lower Bollinger Band. Remember that RSI divergence I pointed out in the last week? Well, that's playing out, okay? And that second close inside the upper Bollinger Bands gave a great buy signal. The first one was early, not surprising because the VIX came out of a base here, but that second one was your good trade. Just like back here, really just like the trade in April. You had your first initial move out of the bands, then back inside. That was early or too early, but then that next move outside the bands, closed back inside, that was your better buy near the lows. Okay. Chart 35, here's the NYAD, advanced decline issues. One thing to point out, this had the positive that was showing up here was this was making new highs. This is making new highs while the S&P isn't. So usually the S&P follows this. So this would be positive for the bulls, saying that the S&P will eventually go to new highs with this at new highs. Moving on, let's look at the bond market. Here's the 10-year Treasury yield, which was down nicely today. Next, chart 37, here's the weekly. Remember, I've been showing this coil. It's busting the coil down. I think at minimum, this may go down to at least its 200-week moving average. Again, guys, this isn't a long-term uptrend now, secular bull market, but, it may, I think it could go lower first. That would help the market certainly go higher. Chart 38, here's another weekly chart. And I haven't shown this for a while, but I added this scenario months ago. You may have recalled. I was postulating maybe a nice pullback in the 10-year, but ultimately some sort of higher low. By the way, there's big support here around this 3 to 3.5% range. But I'm looking for a higher low, but then eventual move up to a new high. Maybe that'll correspond with, a topping market, next big pullback in the markets or something like that. But for now, if it does this, that would help support the market rally. And chart 39, here's the big picture view going back to 1980, 24 years. So again, you could see first off, we broke out of this 35-year channel. So that ended the secular bear market in interest rates, the secular bull market in bonds. So the new normal is up. We're in a secular bull market in rates, guys, but you don't go straight up. You can see we stalled initially at this resistance demand zone or supply zone around the 5% area. If we pull back here again, this is big support now. I think then we eventually rally up again. But for now, maybe this pulls back more. Next, chart 40, here's TLT 20-year bonds. Remember, I've been showing this as a nice coil. It's now starting to break the coil to the upside. It's at 2% this week. So that's a way to play the pullback in rates. Chart 41, here's TMF. The way I'm playing a pullback is with the leveraged ETF. This is the 3X TLT. I've been showing this, and you can see breaking out of that today. Chart 42, here's the S&P versus high yield corporate. Remember, I've been showing this. High yield corporate has been making higher highs, unlike the S&P. Usually high yield corporate leads, so that's maybe another positive for the market. Chart 43, here's the unemployment rate. And remember, we have the jobs report on Friday. That said, this unemployment rate, in my opinion, with the way this gave a buy signal here, to me, unemployment rate is going to continue to tick higher. Remember, unemployment rate moves like a barge, not like your Ferrari sports car. It doesn't turn on a dime. When you get these moving averages cross, tends to produce moves that last years on end, right? The fastest one here was in the COVID where it shot up, but even then they stayed positive for about a year. So this isn't turning back down anytime soon, guys. This should go up now for maybe at least 2 or 3 years perhaps. Next, moving on to the sectors. Chart 44, here's XLK Technology. Remember, this came all the way down to this trend line from the October lows yesterday, bouncing logically. Next target would be this 50-day moving average up here. Chart 45, here's the semiconductors. SMH got near that 61 fib yesterday. Nice bounce back today. Chart 46, here's the banks. These areas have had great moves. We could see it looks starting to look a little tired here. You can see the RSI divergence. Chart 47, here's KRE. That's the regional banks. Been saying this looks a bit tired, and especially on the 2 hour, which you see right here. Here's the 2 hour. You can see this resistance area. You have a really strong MACD divergence here. Chart 49, here's industrials. They made a new high today, you can see, at least on the intraday. It's been strong. Chart 50, real estate. Again, this has been a strong sector, anticipating a rate cut, this in home builders. Now you do have an RSI divergence setting up here, so be aware of that. Chart 51, here's utilities, XLU. Remember, I've been showing this as a bullish setup. Broke out today. Hopefully you bought it before today. Nice move. And chart 52, here's a utility stock, NE, Next Era Energy. Nice tight coil pattern, breaking out in some volume. This still looks really good when you could still buy. First target would be the attack of the highs. Chart 53, XLE Energy. You can see gap today tested that downtrend coil line where it pulled off of. So this is a nice pattern to monitor. Chart 54, oil services. This is the weekly chart. Remember, I like this weekly coil that's developing here. Chart 55, here's oil services on the zoomed out weekly. Again, you can see the same coil. I own a position in this, a swing position that I'm trying to give some room. I think eventually, if it can break out of the coil, I think it fills this thin zone. As far as another area is the Chinese area. I think this looks interesting. FXI, it's getting oversold, little bounce today. And the leveraged play, which is yen, got into a little demand zone here. Let's move on to commodities. Nice day in commodities. So here's DBC. What do you see, this guys? It came right into the demand zone. Boom, rallied right off of it. This was the area to take a shot at yesterday. Also, here's the weekly. Why did it bounce there? You got a weekly trend line. We bounced right off it. Remember, over a month ago, we stalled at the upper trend line. Now we're bouncing off the lower weekly trend line. Chart 60, crude oil, also rallying near this big coil. Nice day. Here's the weekly chart. You can see the big weekly coil there. You can see we basically bounced right near that coil trend line. That's support. Chart 62, natural gas. Now, I've been showing this as a bottoming play. Nice MACD divergence. You had a big rally yesterday. It was a good rally. Stalled at the 9 EMA. Today was an inside day. That said, I still think it looks good here. So here's the 2 hour chart. Notice you got a wedge here with MACD divergence. So I'll be watching this tomorrow to see if it can break out of here. Remember, natural gas inventories tomorrow. Chart 64, copper. What do you know? Nice bounce. Why did it bounce today? It was in a demand zone. You see that? That demand zone, that lower, higher low there, that created the demand zone. You also had the 200-day moving average there. Nice move. How did I play it? I bought the copper ETF, ETN or whatever. It was right into that demand zone. You had a perfect three-wave pullback, ABC. Nice move, up 2.5% today. Again, should have bought it the last couple of days. I actually bought it on Monday. But again, you really had the last, 4 or 5 days you could have bought this into this demand zone. Chart number 66, here's the 60-minute chart. You can see the nice MACD divergence that was there. Created a nice pop. Chart number 67, the one commodity that hasn't done well lately is DBA. Still struggling here. You can see it's below these moving averages, 50-day, 20-day, etc. If this were to go down, maybe it targets this 200-day in this next demand zone. Chart number 68, here's wheat. Been showing this, has this wedge pattern. Still, it has not broken out, but I'm monitoring the MACD divergence here, RSI divergence. I do own a little bit of this. I will add if it breaks to the position, the wedge. Here's the weekly. Why do I like it in here for a trade? Look at this potential double bottom support here. It's come down a long way from the 2022 highs, as you can see, from 12.5 down to, about $5. Next, chart number 70, here's Bitcoin. Bitcoin's been weak this week, guys. It's down 5%, pulling back off that resistance. Again, I do believe a wave 5 or 4 was put in. This will eventually rally to a new wave 5, but it needs to clear this trend line resistance. Chart number 71, here's the daily. Chart number 72, here's US dollar, pulling back here, looking a little weak. Here's the weekly chart, this coil pattern, still in the coil technically. We'll see which way this breaks. Chart number 74, Japanese yen ETF. I've been showing this for the last month. I said this looked really good a month ago for a long, nice rally. You can see the last several weeks it's went up, and this week it's already up 2.6%. That's a big move on this currency ETF. Chart number 75, here's the monthly. Why do I like this? Look at this. This is just a textbook wedge. Look at that wedge. Look at that MACD divergence, RSI divergence. Just beautiful. So I own this. I've commented that I own this. Moving to precious metals, here's gold. Gold up nicely today. Made a brief new all-time high. Bounced off that demand zone recently. Gold's in a bull market, as you know. Chart number 77, here's the tradable ETF. Remember this demand zone I talked about? Why is this demand zone? You have a higher low and a couple dojis. That's your demand zone. So nice move here. Chart number 78, here's the weekly chart. My guess is we're working on some sort of wave 5 here. All right, we got a wave 4 pullback back here. We are setting up a MACD divergence, RSI divergence. Once this move ends, then I'm looking for maybe a larger wave 3 pullback. All right, so this wave 5, once it ends, I expect it to just end wave 5 of 3. This is a bull market, guys. So that won't end the bull move. Here's my bigger picture view, the monthly chart. That'll end the wave 3. Once that ends, we get a bigger wave 4 pullback. But then we should be off to the races in wave 5. Maybe eventually $3,000. Chart number 80, here's silver. Nice bounce the last couple days. For me, silver, I mentioned, was a low risk area to start scaling back in if you've avoided this last correction. We have 3 waves down. Yeah, maybe it comes down again, gets to the 200-day moving average, but silver looked lower risk last, a couple days ago. Here's the monthly chart of silver. Remember, we had a major breakout this year from that monthly coil. One of my targets is the supply zone up here. We've never hit that. And I think silver may eventually retest the $50 highs. Chart number 82, here's GDX, the miners, nice move. Hasn't made it back to the highs yet. Been a great rally on the miners since that March 1st buy signal there. Here's a couple individuals. Here's Newmont. Remember I showed this as a tight coil pattern back in early July. Broke out, and it's making a new high today. Some others, here's AG. I get questions on this one. Yes, I still own a position in this. Little core position. I think this will work much higher prices over time. Chart number 85, here's the daily. You can see basically had a double test of the 200-day moving average recently. That said, guys, the stocks are doing well here, but again, I don't know how far this rally goes because here the BPGDM is already at almost 93% now. And you have a big MACD divergence setting up here. Remember, this only goes from 0 to 100, right? So if this gets up near 100, where all the stocks are on point and figure buy signals, that's a contrarian when everything's on a buy, right? Down here in March, when it went on a buy signal, that was low risk. That was in the oversold territory. Well, we're strongly in the overbought territory. So just be aware of that, guys. Ride the trend, but just be aware this may not be a super long uptrend before it tops. All right, guys, let's move on to the final part, the trade ideas. So PRM's been on the list. Really nice move from that ascending triangle. Continues moving up. Very good volume. No MACD divergence. No RSI divergence. And if you're in this, you might as well stick in it. Just trail a stop below that 9 EMA. Looks good. Chart 88, here's McDonald's. I showed that the other day. They had a nice little base here. Remember, they had earnings. The earnings weren't good, but they've bounced the last couple days. Chart 89, here's AMD. Remember, they had earnings. They were in the demand zone. That was the area to take a shot. And they did move up higher today, but off the highs. Chart 90, NVIDIA had a nice pullback. There is an open gap down here. I was wondering if we're going to fill that, but yesterday was probably a good area to take a shot. Nice bounce today. Still below the 50 and 20-day moving averages. So far, just 3 waves down. Chart 91, here's CMP. It's been on my list. Technically triggered today over that high, little ascending triangle pattern off the lows here, expanding volume. So if you're long, no reason to sell it. Just put a stop maybe just below this trend line here or today's lows. Chart 91, PACB. It's been on the list here, seems like for a couple weeks now. I like this nice base. Your buy opportunity was on that back test of that trend line. You got a nice clean horizontal resistance here. If it can clear this, I think easily melts up to that $3 range. Chart 93, YY. I've had it on here forever. It's still struggling. Hasn't broken here. It needs to break through this downtrend channel pattern for a long. Chart 94, APPS. Also another little tight ascending triangle pattern. Needs to clear this 250 area. Chart 95, NYCB. It's been on the list here. Nice base. It's a regional bank, by the way. No changes. Chart 96, ACB. This is from one of our astute members, Ed Z. He goes by on the trading community. Nice tight coil here. I like this setup, so I added it. Over today's highs, or over 630 would trigger long. Chart 95 is 97, MDGL. I've had this on the list forever. It keeps holding support. All right. So just watching this, I probably should have bought some yesterday on that pullback. I could have had a tight stop below that trend line, but still, this is resistance up here. Pattern still looks okay. And chart 98, KVUE, little bottoming pattern. All right, guys, we'll see what happens tomorrow. Like I said, futures are up nicely tonight, and hopefully to see a gap up tomorrow. Remember, the SPY QEBTS system will be exiting tomorrow on the open, so it should be a nice trade. Anyway, have a wonderful evening. Thanks for all your support. If you're on YouTube, please like, subscribe, comment, and if you're not a subscriber, please consider subscribing. It helps us out, and it'll help your wallet out. Take care.